Hi, I'm Kep Kepner CPA here in Dallas. As a small CPA firm whose clients are all small business owners, we don't do audits. Now, that's not to be confused with a tax audit, because if Uncle Sam starts calling on you, we will defend you like it was ourselves. So that kind of audit we do. But financial statement audits we don't do. They are very complex, and for many businesses, it's overkill for what they're trying to do. If you're trying to take your company public, then maybe at that time you need a financial audit. Or if you're already public, maybe you need a financial audit. Sometimes, if you're borrowing enough money from a banker, you may need a financial audit. But most small businesses don't need that. So the next level of financial reporting is called a reviewed statement. And in general, for a reviewed statement, the CPA is attesting that you are following all the generally accepted accounting principles, and that we don't see anything in your financial data to say that they would have varied by more than 10%. So if you have a financial statement that's reviewed by us, and you have $1 million worth of inventory, and you're really only a small company with $1 million in sales, then we're going to tell you we can't do a financial reviewed set of financial statements, because it's really clear you might not have $1 million in inventory, and a 10% change in your inventory could wipe out all your profit and could wipe out all of the lending that you get from somebody that is relying on these financial statements. So as a CPA doing reviewed financials, we want to make sure that those financial statements are pretty realistic and that they're not going to change by more than 10%. So that's what a reviewed statement is. Now, how is that used? Well, it's certainly used by construction companies that are trying to do bonding. We have several clients that are small construction companies, need construction bonds, so they must have a reviewed financial statement. Their bonding companies have said, if you want to get a bond from us, you've got to have reviewed financial statements. And so we can step in and help with that. We also have a client that does business in Arkansas as an electrical contractor. The state of Arkansas requires a reviewed financial statement. So a reviewed financial statement is basically a profit and loss, a balance sheet, and a statement of cash flows that is subject to scrutiny by the CPA, that it does meet particular generally accepted accounting principles, and that there's nothing in it that suggests the financial statements should be changed by more than 10%. So if you're doing business in Arkansas and it's a big profit center from you, then you need to have a reviewed financial statement. If you're trying to do bigger and bigger jobs as a contractor, then there you need to have reviewed financial statements that allow you to get bonding for your jobs, and it will allow you to do bigger jobs. So if you need help in that area, we'll be glad to help. Give us a call. Thanks.